Hello everyone. Today we are going to do a revision of the area CGT. First, let us discuss all the major topic areas of CGT and move to the question practice area from Study Hub. So CGT is a form of direct tax which is suffered and paid by individuals on the taxable gain they earn. In this chapter, you have to learn the list of assets which are exempt in CGT and which are taxable under CGT. So normally, all the assets other than vehicle, be it car, vintage or otherwise, main residence which is fully occupied, certain chattels, investments held with ISA, corporate bonds, gilted securities, national savings certificates, premium bond, cash, receivables, trading inventory, prices and betting wings, foreign currency for private use. Other than these items, rest of all the items are taxable asset or chargeable asset. That means if you sell any assets other than the list given here, you will have to pay tax on the taxable gain. Now, from this list, I want you to add one more item, that is prices received for valor or bravery. So such prices which you have received rather than you've purchased, such prices are also exempt asset. It is very important to learn the list of exempt assets so that in a question when they give you information, you can easily remember the fact that this is exempt. You don't need to do a calculation for that. Now, all the assets other than the list here will fall under the category of taxable or chargeable asset, which is land, building, goodwill, leases, unquoted shares, certain type of chattels, plant and machineries, etc. Now, the first part of doing a computation is the computation of chargeable gain or the allowable loss. So when you do the computation of chargeable gain or allowable loss, you have to do that separately for each asset. So when you calculate chargeable asset for 5 of them, you have to do 5 separate calculations on 5 separate disposals. Starting off with the disposal proceeds. And if you are making the sale to connected party or if it is a gift, you have to take the deemed proceeds, which is the market value, less the selling cost, which will give you the net proceeds. From that, you have to deduct the cost of acquisition, incidental acquisition cost, enhancement expenditure to finally arrive at the chargeable gain or the allowable loss. Now, after individually calculating the chargeable gain, you need to net it off. So you have 5 disposals. You individually calculated the chargeable gain and allowable losses of 5 assets. Now you need to net off to calculate the net chargeable gain. So if the net figure is positive, we call it as net chargeable gain. If the net figure is negative, we call it as net allowable loss. So net chargeable gain or net allowable loss is equal to all the gains minus current year gains minus current year capital loss or current year allowable loss. Now, if you have a loss, net allowable loss, you can stop your calculation there and you can claim a relief carrying forward in the future chargeable gain. But if you're having a net chargeable gain in the current year, you can proceed with your calculation and you need to calculate taxable gain. So in order to do the taxable gain calculation, you have to list out your net chargeable gain. From your net chargeable gain, you can first claim a relief for current year trade loss relief, which is lower of current year trade loss minus current year total income, or net chargeable gain minus capital loss brought forward. From the remaining figure, you can make an AEA deduction of maximum 6,000. And if there is anything left, you can make a current year capital loss relief as well to finally arrive at the taxable gain. Now keep in mind, there are a couple of points we have to remember. Enhancement expenditures given here. So what all expenses can be considered as enhancement expenditure? Expenditures which are of capital nature. For example, improvement, extension, conservatory added, or enhancement expenditure as such. Any revenue nature expenditures have to be ignored. For example, repair, maintenance, replacement, redecorations are all examples of revenue expenditures. Now, selling cost and incidental purchase cost are almost the same instead of the timing. One is at the time of purchase, the other one is at the time of sale. So advertisement cost at the time of purchase is incidental purchase cost. Advertisement cost at the time of sale is incidental selling cost. Legal cost at the time of purchase, legal cost at the time of sale. So these are incidental purchase and selling cost. And if it is an incidental selling cost, you have to take here to get your net proceeds. If it is an incidental purchase cost, you have to deduct it from here to calculate your chargeable gain. Now, the rate of tax is based on a couple of questions. So I hope you know the idea. If your taxable income is greater than or equal to your basic limit, which is normally 37,700 without band extension. So if your taxable income is greater than 37,700, you are a high income earner. All the taxable gain has to be taxed at higher rate of 20%, and if it is a residential property, 28%. If the answer is no, you have to check whether your taxable income plus your taxable gain is less than 37,700. In that case, you are a low income earner. So whatever gain you have, it can be taxed at a lower rate of 10% and 18% for residential property. Again, if the answer is no, the remaining bandwidth of your basic limit will be taxed at 10%. That is 37,700 minus taxable income. That much quantity will be taxed at the basic rate, and the remaining gain will be taxed at a higher rate of 20%. The rate of residential property is 18 and 28. One peculiarity for residential property is that the tax has to be paid as a BOA within 60 days from the disposal date. So disposals of UK residential property must be reported to HMRC within 60 days of completion, along with the payment of account of the relevant CGT liability. Now, in a question, if you have chargeable gains related to normal assets and residential property, you have to do a separate computation till the taxable gain. That means normal asset എന്ന് പറയുമ്പോൾ അവിടെ ഉദ്ദേശിക്കുന്നത് ലാൻഡ് ബിൽഡിംഗ് പോലത്തെ അസറ്റുകൾക്കൊക്കെ നിങ്ങൾ സെപ്പറേറ്റ് ആയിട്ട് നെറ്റ് ചാർജബിൾ ഗെയിൻ കമ്പ്യൂട്ടേഷന് താഴേക്ക് ചെയ്യുക. റെസിഡൻഷ്യൽ പ്രോപ്പർട്ടിക്ക് മാത്രം നിങ്ങൾ ഒരു സെപ്പറേറ്റ് കമ്പ്യൂട്ടേഷൻ ചെയ്തിട്ട് അതിന് സെപ്പറേറ്റ് ആയിട്ട് ടാക്സിബിൾ ഗെയിൻ കണ്ടുപിടിക്കണം. കാരണം അതിന്റെ റേറ്റ് ഓഫ് ടാക്സ് ഡിഫറെന്റ് ആണ്. So you have to calculate a separate rate of tax there. Transfer between spouses is at no gain, no loss. അതായത് ഫൈനൽ ആൻസർ എങ്ങനെയായിരിക്കും? 0 ആയിരിക്കും. എക്സെപ്റ്റ് എന്ന് വിളിക്കരുത്. CGT-ല് ഹസ്ബൻഡും വൈഫും സിവിൽ പാർട്ട്നേഴ്സും തമ്മിൽ നടത്തുന്ന അസറ്റ് ട്രാൻസ്ഫേഴ്സ് ആർ at no gain, no loss. പാർട്ട് ഡിസ്പോസൽസ്, ലാൻഡിന്റെ ഡിസ്പോസൽസിൽ വരുന്ന ഒരു കോമൺ കാൽക്കുലേഷൻ ആണ് പാർട്ട് ഡിസ്പോസൽ. സോ വാട്ട് ഹാപ്പൻസ് ഇൻ എ പാർട്ട് ഡിസ്പോസൽ? നിങ്ങൾ നിങ്ങളുടെ ലാൻഡ് മുറിച്ച് വിൽക്കുകയാണ്. യു ആർ പാർട്ട്ലി സെല്ലിംഗ് യുവർ ലാൻഡ്. So you can take your sale proceeds. From that, you have to take the cost of the portion disposed, which is equal to the total cost into the selling price divided by selling price plus the market value of the remaining portion. So you will get your cost of that particular portion disposed, and when you set off, you will get your chargeable gain or allowable loss. Next is chapter chattels. So chattel is a very important chapter in terms of the questions you get in section B. So chattels are movable and tangible assets. So normally paintings, antique items, plant and machineries, animals, they all fall under the category of chattels. Now there are two classifications of chattel. There is a non-wasting chattel whose expected life is more than 50 years. And there is wasting chattel whose expected life is less than or equal to 50 years. For the case of non-wasting chattel, there is 3 scenarios. Non-wasting chattels which are bought and sold for 6,000 pound or less. That means the selling price is less than 6,000. Cost is also less than 6,000. It is exempt in CGT. Second situation where the selling price and the cost both are above 6,000. So the selling price is above 6,000. Cost is also above 6,000. It is a normal chargeable gain computation like we have discussed previously. Third situation is where either the selling price or the cost is less than 6,000. ഏതെങ്കിലും ഒരു വാല്യൂ അത് സെയിൽ ആവാം കോസ്റ്റ് ആവാം ഏതെങ്കിലും ഒരു വാല്യൂ 6,000 താഴെ ഒരെണ്ണം 6,000 മുകളിൽ അപ്പൊ അങ്ങനെ ചെയ്യുന്ന സമയത്ത് we have to check whether it was sold at gain or sold at loss. If it was sold at gain, that means the selling price is greater than 6,000, cost is less than 6,000. So if it is sold at gain, you need to calculate your chargeable gain as lower of normal calculation, which is cost minus selling price minus cost, or 5/3 into gross proceeds minus 6,000. So gross proceeds is your net proceeds plus selling cost. If it is sold at loss എന്ന് പറയുമ്പം selling price 6,000 താഴെയും cost 6,000 മുകളിലും അങ്ങനെയാണെങ്കിൽ whatever be the actual selling price, you have to write there 6,000. So be the selling price be 4,000, but you have to write there 6,000, and then you can do the normal cost calculation and proceed. Then wasting chattel whose expected life is less than or equal to 50 years. Chattels not eligible, wasting chattel not eligible for capital allowance like assets used in private purposes are exempt in CGT. Chattels eligible for capital allowance like fixed plant and machineries, that is normally what you get for your examinations. If it is sold at gain, normal computation. If it is sold at loss, it is no gain, no loss computation. Other wasting asset, which is normally in your situation, copyright, patent, trademark. So on the sale of copyright, patent, and trademark, you need to calculate the cost, which is the depreciated cost, which is cost into remaining useful life divided by the total useful life to calculate your chargeable gain computation. So next is chapter 14, which is shares and securities. So disposal of shares and securities by individuals in order to calculate chargeable gain. Now keep in mind, normal investments are exempt in CGT. So normally shares are the only set of items which are taxable under CGT. So these shares are given as a gift, or these are transferred to connected party. Instead of taking the actual selling price, you have to take the market value or the deemed proceeds, which is an average of the quoted market value. Then the cost. These shares are purchased at different costs at different dates previously. But the exact cost നമുക്ക് മനസ്സിലാക്കാൻ പറ്റത്തില്ലാത്തതുകൊണ്ട് നമ്മളിവിടെ matching rule apply ചെയ്യും, which is cost of the shares purchased on the same day of disposal, cost of the shares purchased on following 30 days after disposal, and the remaining cost will be taken from the share pool. At the time of bonus issue, there is no cost involved. At the time of rights issue, the number of shares and the cost also increases. There is a case for reorganization and takeover. So the idea of reorganization is when a smaller company is taken over by a larger company and the existing shareholders are given either cash or shares, or in another situation, both shares, preference shares and ordinary shares. And one of the shareholder resells their ordinary shares. At that point, you have to calculate a chargeable gain computation. So if you have attended my class, you know the storyline behind reorganization and takeover. This is a very fixed and a constant kind of a calculation. And the last and the most important chapter of CGT is business relief. So the different reliefs available for an individual includes BADR, investor relief, rollover relief, gift relief, PPR relief, and letting relief. For BADR relief, the relief is that there is a reduction in your tax. You have to only pay a tax at 10% if all the conditions are met. That means you have to either sell your entire business or a substantial part of your business, or you have to seize your business and sell all the assets within 3 years of cessation. For shares, it should be your personal trading company. That means you should have a holding of more than 5% and you should be an employee of that company as well. All of these conditions should be satisfied for a minimum of 2 years prior to disposal. If these conditions are met, you are eligible for BADR relief. Now keep in mind, assets disposed of a continuing business, നിർത്തി പോകാത്ത ഒരു ബിസിനസ് ആണ്. അവര് കണ്ടിന്യൂ ചെയ്തുകൊണ്ടിരിക്കുന്നതിന്റെ ഇടയ്ക്ക് ഒരു അസറ്റ് വിറ്റ് കഴിഞ്ഞാൽ അവർക്ക് BADR റിലീഫ് കിട്ടത്തില്ല. ഒന്നെങ്കിൽ നിങ്ങൾ ബിസിനസ് വിൽക്കണം, അല്ലെങ്കിൽ ബിസിനസിന്റെ ഒരു മേജർ പോർഷൻ വിൽക്കണം, അല്ലെങ്കിൽ ബിസിനസ് അവസാനിപ്പിച്ചിട്ട് അതിനകത്തെ അസറ്റുകൾ മറിച്ച് വിൽക്കണം. ആ ഒരു പോയിന്റിലാണ് BADRന്റെ എലമെന്റ് കയറി വരുന്നത്. BADR is also not eligible for investment properties as well. So the first 1 million of your gain will be taxed at 10%. You don't even have to consider the taxable gain as well. Now all the deductions have to be made from the gains not eligible for BADR. The claim for BADR relief has to be made from the following 12 months following 31st January after the end of the tax year. That means, let's say your tax year is 23-24. End of your tax year is 5th April 2024. The next 31st January is 31st January 2025. You need to count 12 months from here. So 12 months from here is equal to 31st January 2026. So by 31st January 2026, you will have to claim your BADR relief. Next one is investor relief. Now, investor relief is available for disposal of shares for individuals. It should be your personal trading company, but you should not be an employee of that company. BADR relief ആണെങ്കിൽ നിങ്ങളുടെ personal trading company ആയിരിക്കണം, you should be an employee of the company. പക്ഷേ investor relief it should be your personal trading company, but you should not be an employee of that company. Also, these shares have to be subscribed directly from the company on or after 17 March 2016 and owned for at least 3 years after 6th April 2016. Three conditions meet, you are eligible for investor relief, and your first 10 million gain will be taxed at 10%. Then you have rollover relief. I told you 4 situations for rollover relief, and if you have any, if you have seen the recorded videos, you are aware of the fact that there are 4 situations of rollover relief. First is a case of full reinvestment. So, I sold an asset which is used in the business, and I replace that asset with a new asset which is used in a business, and it is a full reinvestment. That means the sale proceeds of the first asset is fully reinvested into the cost of the second asset. You don't have a chargeable gain at the time of disposal. Only when the second asset is disposed, you will have any chargeable gain. Second situation, partial reinvestment, where the sale proceeds of the first asset is not fully used in the cost of the second asset. So there will be a chargeable gain at the time of disposal and the remaining at the time of disposal of the second asset. Third situation is business and non-business use, where you have to split it. And fourth situation is depreciating asset. That is, if the second asset is a fixed plant and machinery or leasehold property, you have to do a depreciating asset. You have to do a deferred gain computation, where you're freezing your gain and it becomes taxable at the earliest of 10-year anniversary of purchase of the second asset, disposal of the second asset, or cessation of usage of the second asset. So there is a format for ROR. I hope you're aware of that. With this format, you can easily calculate the chargeable gain at the time of disposal of the first asset. You can calculate the base cost of the second asset, or you can also calculate the chargeable gain of the second asset as well. Now, PPR relief, this is available if it is you're selling your main residence and it is fully occupied. Rule for PPR relief, if you can prove actual occupation from the date of purchase till the end date, it is fully exempt. Or you can prove deemed occupation. So deemed occupation means the last 9 months of ownership is deemed occupation. 3 years of absence for any reason. Any period spent employed abroad, which is usually for employment purpose, and period not exceeding 4 years, employed or self-employed within UK or abroad. So in order to apply In order to apply B, C, or D, you should be preceded by and followed by a period of actual occupation. But the last 9 months condition is irrespective of whether there is an actual occupation after that. And finally, you have letting relief, where your main residence is let out during your period of occupation. Letting relief is a lower of 40,000 PPR relief, or gain amount into letting period divided by the total period of ownership. And finally, holdover relief. So, or gift relief. If an individual is gifting their business asset to a connected party, they can apply a holdover relief only if in the question they say there is an election made for holdover relief. So again, it is somewhat very similar to your ROR. The only difference is instead of writing ROR, you write gift relief. And what is the peculiarity between gift relief is that the liability to pay the tax is being transferred from the donee to the donor. And when the donor of the gift, from the donor to the donee, okay, from the person who gave the gift to the person who received the gift. Now, the person who received the gift, when they resell it, they will have to pay the tax on the first sale as well. About transferring of liability ആണ് ഈ കേസിൽ സംഭവിച്ചിരിക്കുന്നത്. What happens is the first person who is transferring the asset to the second person is escaping the CGT liability, and the second person who received the gift will have to suffer the CGT liability. Again, there is a period within which they have to claim their gift relief, which is made by 5th April 2028. So, നിങ്ങളുടെ tax year അവസാനിക്കുന്നതിൽ നിന്ന് 4 years ആണ് count ചെയ്യേണ്ടത്. So, that is 5th April 2028. So, that is also, this is one of the most important chapter. So, if you're someone who is doing self-study for tax paper, I recommend you spend a good amount of time for the area business relief, because this is very much tested for your examination, section B. Now, we will be doing questions. Let us do questions from Study Hub. Okay, so first question. Peter purchased a holiday home in July 2014. The home cost him 95,000 and he paid a legal fees of 2,600 relating to the purchase. During 2019, he spent 6,700 for extension, and in 2022, he spent 3,300 on roof repairing. And he is planning to sell this house within the next few months. What is the total amount of allowable expenditures on the disposal of holiday home? Now keep in mind, allowable expenditures includes purchase cost, which in this case is the purchase cost is 95,000. So the purchase cost becomes 95,000. And any incidental purchase cost. So incidental purchase cost includes legal fees, advertising fees, agency fees. So you have a legal cost at the time of purchase, which is 2,600. And also you can include enhancement expenditure as well. So enhancement expenditure includes, it is extension, anything which is of capital nature. Okay, that will be better. So anything which is of capital nature, which is extension, conservatory added, improvement, enhancement expenditure as such. Now in this question, they are very clearly telling you there was an extension for 6,700. So that is also allowable expenditure. There was a repair of 3,300. Now keep in mind, repair is a revenue expenditure which is not considered as an allowable expense. So therefore, you cannot deduct it from your selling price. So this is indicated with 0. So if someone asks you what is your total allowable cost, അതായത് ഭാവിയിൽ വിൽക്കുന്ന സമയത്ത് നിങ്ങളുടെ സെല്ലിംഗ് പ്രൈസിൽ നിന്ന് ടോട്ടൽ എത്ര കോസ്റ്റ് ഡിഡക്ട് ചെയ്യണമെന്ന് ചോദിച്ചു കഴിഞ്ഞാൽ ആൻസർ ഇസ് 1,04,300. So the answer is option C. Next one. For the tax year 23-24, Arthur's taxable income is 31,985. During the year, he sold an antique chair which gave rise to a chargeable gain of 28,300. What is Arthur's CGT liability for 23-24? So they are asking you CGT liability computation. So you are given the chargeable gain. Keep in mind, CGT is calculated on a figure known as taxable gain. So you will have to take your chargeable gain, which is 28,300. And in order to calculate your taxable gain, you have to claim a current year trade loss relief, which is not in this question. You can deduct AEA. So AEA is a maximum of 6,000. Those students who are doing resit, please keep in mind your AEA has changed from 12,300 to 6,000. So also you can deduct capital loss brought forward, but you don't have a capital loss brought forward in this question. So your taxable gain is equal to 22,300. Now we need to calculate the tax on this. So CGT liability is based on your taxable income. So the first question is your taxable income. So in this question, they have given the taxable income 31,985. Is your taxable income greater than basic limit 37,700? The answer is no. Is your taxable income plus your taxable gain less than 37,700? Again, the answer is no. Then whatever is your remaining bandwidth in basic limit will be taxed at a lower rate of 10% and the excess will be taxed at a higher rate of 20%. That means out of 37,700, 31,985 is your taxable income. So whatever is remaining, which is 5,715, will be taxed at a lower rate of 10%. And the excess gain, which is equal to 22,300 minus 5,715 will be, which is 16,585 will be taxed at 20%. So this is how you will arrive at your CGT liability. So your CGT liability is based on your taxable income. So if you're a high income earner, that is, if your taxable income is greater than basic limit, you're a high income earner, the entire gain will be taxed at the higher rate of 20%. And if it's a residential property, 28%. If your taxable income plus your taxable gain is less than basic limit, that means you are a low income earner, entire gain will be taxed at a lower rate of 10%. If it's a residential property, 18%. And if it is something in between, you will utilize your remaining basic bandwidth and whatever is left will be taxed at a higher rate. So in this situation, the answer is, so that is equal to 5,715 into 10% and is equal to 16,585 into 20%. And you have to take a sum of this. And make sure you round your answers. No decimals are allowed in tax paper. So the final answer is 3,888. Answer is option B. Okay, next question. What is Morgan's CGT liability for the tax year 23-24? In March 2010, Morgan purchased a freehold of an office building for 6,41,000. That was the purchase cost. Morgan sold the building in March 2024 for 1,130,100. He made no other disposals of chargeable asset during the tax year and his taxable income is 52,000. So the first thing is to do a computation of taxable gain. So in order to do the taxable gain computation, you have to first take the sale proceeds, which is equal to 1,130,100. From that, you have to deduct your purchase cost, incidental purchase cost, as well as enhancement expenditure. So your purchase cost is 641,000. So after making a deduction, your chargeable gain is 489,100. So this is your chargeable gain. You're not done here. You have to deduct AEA as well, which is equal to 6,000. Again, remember, those are doing self-study or research. Your AEA has reduced from 12,300 to 6,000. So your taxable gain is equal to 483,100. Now you need to calculate your CGT liability on this. Now the rule is if your taxable income, so your taxable income is 52,000. So is your taxable income greater than 37,700, which is your basic bandwidth. Without band extension, it is 37,700. If the answer is yes, remember you are a high income earner. Therefore, the entire gain will be taxed at such CGT payable is equal to 483,100 into higher rate of 20%. If it was a residential property, 28%. So that is equal to this figure into 20%, which is 96,620. Next one. What is NOx CGT liability for the tax year 23-24? Answer in pound in the answer box. That means you have to round it to the nearest value. For the tax year 23-24, his taxable income is 35,000. He sold a residential property which was not his private residence, so he is not eligible for PPR, which give rise to a chargeable gain of 48,400. So his chargeable gain here is equal to 48,400. From this, you have to make a deduction for AEA. There is no trade loss relief. There is no capital loss relief. So you have to make a deduction of 6,000. And finally, you will get your taxable gain. So your taxable gain is equal to 42,400. You will have to calculate tax on this. So let's take your taxable income. So your taxable income is 35,000. Is 35,000 greater than your basic bandwidth? The answer is no. Is 35,000 plus 42,400 less than 37,700? Again, the answer is no. So that means from 37,700, the remaining bandwidth, so the remaining bandwidth is equal to 2,700 will be taxed at a lower rate of 18% because it is a residential property. And the remaining gain, which is equal to 39,700, will be taxed at 28%. So that brings us to 2,700 into 18% and is equal to 39,700 into 28%. So your total CGT payable is equal to 11,602. So that is 11,602. For the tax year 23-24, Samantha has a chargeable gain of 27,800 and a capital loss of 10,000. So in the current year, there is a gain and a loss. She has unused capital loss brought forward of 25,700 from the previous tax year. What amount of unused capital loss can Samantha carry forward to the next year? So the idea is current year chargeable gain is 27,800. From the current year chargeable gain, first you will set up current year capital loss. So your current year capital loss is equal to 10,000. So your net chargeable gain is equal to 17,800. From the 17,800, you will set off AEA, which is equal to 6,000. And again, you are left with 11,800. From this 11,800, you will set off capital loss brought forward from 20 to 23. So you're setting up the loss you brought forward is 25,700. You can't set off 25,700. You can set off a maximum of 11,800. That means your taxable gain will be 0. It's irrelevant for our calculation because we don't want the taxable gain. We need to find out what is your unrelieved capital loss. So in this scenario, you'll take your capital loss. You'll take your capital loss for 20 to 23, which was 25,700. From that, you will deduct the relief you have given for 23-24 tax year, which is a maximum of 11,800. That means you are still left with your unrelieved capital loss is equal to 13,900. So the answer is 3,900. This is the amount you'll carry forward to 24-25 tax year. So that is 13,900. Next question. On 31st March 2024, Jessica sold a copyright for 28,800. The copyright had been purchased on 1st April 2018 for 21,000 when it had an unexpired life of 15 years. So there was sale of copyright is a depreciating asset. So you have to do the calculation with, you'll take your sale proceeds. From your sale proceeds, you have to deduct depreciated cost. That is very relevant. Not the normal cost, but the depreciated cost to calculate the chargeable gain. So first let's consider the disposal proceeds, which is 28,800. So the disposal proceeds is 28,800. You have to calculate your depreciated cost, which is equal to your actual cost of 21,000 into what is your remaining useful life after disposal. So what is your remaining useful life after disposal? It is when you purchased it on 1st April 2018, it had a total useful life of 15 years. You sold it on 31st March 2024. That means remaining, it has already passed 18 to 19, 19 to 20, 20 to 21, 21 to 22, 22 to 23 to 23 to 24. So already 6 years have passed. Yes, already 6 years have passed. Now you have a remaining 9 years left. So 9 years, which is the remaining life after disposal divided by the total life. So you are left with, this is your depreciated cost, just 12,600. So once you deduct this, you will get your chargeable gain. Your chargeable gain value, which is equal to 16,200. So answer is 16,200. Let's move on to our next chapter, which is chapter 13. Sale of land is part disposal. So the idea is pretty simple. you need to take the cost of the portion which is disposed, which is the total cost into A divided by A plus B, where A is the sale proceeds of the land divided by A plus B is the market value of the remaining portion. So what is the cost of the 6 hectares of land that Jason has sold for CGT purpose? Okay, so let's read the situation. On 21st March 2024, Jason sold 6 hectares of land for 69,000. He had originally purchased 9 hectares of land on 17th July for 50,000. So he purchased 9 hectares, of which he sold 6 hectares. At 31st January 2023, Jason spent 6,000 leveling the total 9 hectares of land, which is a capital expenditure and can be added to the total purchase cost of 50,000. The market value of the remaining 3 hectares, which is unsold, is 27,600. So we need to get the cost of the 6 hectares. So the cost of the 6 hectares is equal to the total cost into A divided by A plus B, where total cost of the 9 hectares is not 50,000. Just keep in mind, it is 50,000 plus the leveling cost of 6,000, which is 56,000, into A. A is the sale proceeds. The sale proceeds of the 6 hectares is 69,000 divided by 69,000 plus B. B is the market value of the remaining 3 hectares, which is 27,600. So the value is 40,000. So the cost of that exact 6 hectare is 40,000. Next one. What is the chargeable gain or allowable loss arising on the receipt of compensation? This is related to an area of smoke and fire, which I normally recommend students to read on their own because it is a pretty vast area. You might get one question from it maximum, and very rare. If you are getting a question, you can deal with it, but the amount of time spent on it is a little too much. So normally I skip it and I ask you to read your Kaplan textbook for that. On 28th October 2024, Leroy sold an antique vase for 12,100. The vase had been purchased on 28th February 2015 for 1,700. What is the chargeable gain on the disposal of the vase? Okay, so it's an antique vase, means it is a chattel, and to be very specific, it is a non-wasting chattel. Now, the peculiarity of non-wasting chattel is if the selling price and the cost is less than 6,000, exempt. If the selling price and the cost is more than 6,000, it is normal computation. If either one of them is greater than or less than 6,000, either one of them, you will have to see whether it was sold at gain or loss. So let's read the situation. It was a vase. It was sold for 12,100. It was purchased for 1,700. So this is non-wasting chattel whose sale proceeds is greater than 6,000, but cost is less than 6,000, and it is sold at gain. So if it is sold at gain, chargeable gain is equal to, chargeable gain is lower of, in a situation, the chargeable gain is lower of normal computation. Normal computation is sadharana cheyna pole sale proceeds minus cost cheyda madi, or B, which is equal to your gross proceeds minus 6,000 into gross proceeds minus 6,000 into 5 by 3. Okay, so let us do the normal computation first. So the normal computation is equal to the gross proceeds is 12,100 minus the cost is 1,700. That brings us to a value of 10,400. And the second case, gross proceeds is 12,100 minus 6,000 into 5 divided by 3. That brings us to a figure of 10,167. You have to round your answer. Obviously, this is lower. That means the chargeable gain is equal to 10,167. Next one. Anna bought a house on 1st April 1997, which she sold on 31st March 2024. So her total period of ownership is from April 1997 to 31st March 2024. So the total ownership period is equal to 27 years to be specific. That is equal to 324 months. Okay, you have to count that there. The house was the private residence from the date of purchase up till 30th September 2019. So it was his main residence. That means he was occupying it. So there was actual occupation. And after that, another house was made his private residence. That means he no longer stayed in that property for the remaining period. That is from 1st October 2019 till the disposal, which is 31st March 2024. He did not occupy the property, and that is a total of 54 months. So normally the period that you have not occupied in that house becomes chargeable, but the last 9 months is always exempt. That means out of the 54, you can still deduct 9 months, and the remaining 45 months become chargeable. So if you want to calculate your chargeable gain is equal to whatever gain you have attained. So here the gain that you have made is 150,000. You will get 150,000 into 45 months is taxable divided by a total of 324. And that brings you to 2833. Is equal to 150,000 into 45 divided by 324. Have to round your answer as well. Next one. So this is 20. Next one. Which of the following statements about taxpayers' PPR is correct? Any period of absence while working elsewhere in the UK is a period of deemed occupation for CGT. No. Any period of absence while employed abroad is deemed occupation. UK വെളിയിൽ employed ആയിട്ട് നിൽക്കുന്ന എത്ര കാലഘട്ടം ആണെങ്കിലും അത് deemed occupation ആയിട്ട് കാണിക്കാം. UK ഉള്ളില് അങ്ങനെ എംപ്ലോയ്മെന്റോ സെൽഫ് എംപ്ലോയ്മെന്റ് ആവശ്യത്തിന് മാറി നിൽക്കേണ്ടതായിട്ട് വരുവാണെങ്കിൽ it is a maximum of only 4 years, which is preceded and followed by a period of actual occupation. Even if part of it is used exclusively for business purpose, the whole of any gain arising is exempt. No. The portion which is eligible for business proportion is not exempt. That means you'll have to pay tax on that. So both the statements are wrong here. ഒന്നുകൂടെ പറയാം, UK വെളിയിൽ എത്ര കാലം വേണമെങ്കിലും എംപ്ലോയ്മെന്റ് ആവശ്യത്തിന് മാറി നിന്ന് കഴിഞ്ഞാൽ ഡീംഡ് പ്രൊസീഡ്സ് ആയിട്ട് എടുക്കാം, അതിന് ലിമിറ്റ് ഇല്ല. അതേപോലെ തന്നെ ബിസിനസ് പ്രൊപ്പോർഷൻ യൂസേജ് ഉള്ള ഒരു വീട് വിൽക്കുന്ന സമയത്ത് അതിന്റെ ബിസിനസ് പ്രൊപ്പോർഷന് മാത്രം PPR റിലീഫ് കിട്ടത്തില്ല, അത് എക്സംപ്റ്റ് അല്ല, അതിന് ടാക്സ് കൊടുക്കേണ്ടതായിട്ട് വരും. ഈ പറഞ്ഞ രണ്ട് സ്റ്റേറ്റ്മെന്റും തെറ്റാണ്. ആൻഡ് ദ ലാസ്റ്റ് വൺ, on 10th January 2024, again this is a case of fire. Again please read it your Kaplan book. Next is chapter 14, which is related to shares and security and very easy for individual. Again, keep in mind, if it's a connected party transaction, you have to take the deemed proceeds, which is the market value or the mid price average. Quote the market price and average into number of shares you have gifted. Then second thing is cost match same day of disposal following 30 days after the disposal and remaining from the share pool. For bonus issue, there is no cost. For rights issue, the number of shares and the cost changes. Reorganization and takeover. Reorganization takeover in the case of share and exchange of shares and resale you need to calculate chargeable gain. Share and cash in exchange of shares at the time you receive the cash, you have to calculate chargeable gain. Under the identification matching rule, a disposal of share in a quoted company can be matched. Which are the following subsequent acquisition? So, in this situation, the question number A. Same class of shares in the same company? Yes, that is correct. Same class of share in a similar company? No. Any class of share in the same company? That is also not applicable. We have to think about the same company. So, the answer is option A. ഒരേ കമ്പനിയിലെ ഒരേപോലത്തെ ഷെയർ തന്നെ ആയിരിക്കണം സെയിം കമ്പനിയിലെ സെയിം ക്ലാസ് ഓഫ് ഷെയർ ഓർഡിനറി ഷെയർ ആയിരിക്കണം നെക്സ്റ്റ് വൺ Jennifer made the following transactions in the ordinary shares of Easter PLC. Against which acquisition will the disposal of shares on 22nd August be matched? So individual on the same day of disposal. So the disposal is happening on 22nd August, same day, following 30 days, and the remaining from the share pool. So ഇവിടെ option the same day under because you are only selling 350. That entire 350 can be taken from the same day 1200 shares purchased. So the answer is 31st August 2020. So the answer is 22nd August 2020 for same day of disposal. Then Jordan purchased ordinary shares in Birthday PLC as follows. So these are the number of shares purchased and the cost. Jordan sold 500 shares on 15th May for 4,500. He had made no further acquisitions during the year. What amount of cost should be deducted in determining the chargeable gain on the disposal of the shares? So they are only asking you for the cost amount of that. Etra shares are selling 500 shares. So you have to check. The sale is happening on 15th May 2024. Same day of disposal, is there any share purchase? No. Following 30 days? No. Then the remaining has to be taken from the share pool. So when you do a share pool computation, one column is for the number of shares. The other column is for the cost. The number of shares is equal to 500. And the cost is equal to 1250. So you have to list out all the purchases just before disposal. Disposal all purchases list out total proportional value കണ്ടുപിടിക്കുക അത്രേ ഉള്ളൂ 1500 shares and that is for 4850. I have to take a total here and I'll tell you the meaning of the total. So this means you have spent a total of 10,500 pound for 3,500 shares. We need the cost of just 500 shares, which is equal to out of the 10,500, which is for 3,500 shares. We just need the cost of 500. So that is equal to 1,500 pound. Share chargeable gain ചോദിക്കുന്നില്ല just cost amount മാത്രം കണ്ടുപിടിച്ചാൽ മതി. So the answer is 1,500. And the final one. On 31st August 2021, Fernando bought 2,400 ordinary shares in Party PLC at a cost of 6,600. On 31st March 2022, the company made a 1-for-10 bonus issue. On 31st March 2024, Fernando sold 400 shares for 900. What is the chargeable gain or the allowable loss arising on the disposal? So that is a question. So for that, first we need to write the sale proceeds here. Okay, so sale proceeds. So keep in mind, sale proceeds is for a total of 400 shares. This is for 400 shares and the sale proceeds is equal to 900. From this, you need to deduct the cost. So when you take the cost figure, you have purchased 2,400 shares at a cost of 6,600. And also you have made a bonus issue as well. അപ്പോൾ നമ്മളിത് ഷെയർ പൂളിൽ നിന്ന് തന്നെ വേണം കൺസിഡർ ചെയ്യാൻ. സോ കോസ്റ്റ് എടുക്കുന്ന സമയത്ത് സെയിം ഡേ ഇല്ല, ഫോളോയിങ് 30 days ഇല്ല, ഫുൾ ഷെയർ പൂളിൽ നിന്ന് എടുക്കേണ്ടി വരും. അപ്പോൾ in share pool, the first purchase that you have made is 2,400 shares. That is for a cost of 6,600. ഷെയർ പൂൾ സാധാരണ വരയ്ക്കുന്ന പോലെ ഡ്രോ ചെയ്യുക. ഷെയർസ്, this is shares and this is cost. There. അതിനുശേഷം ബോണസ് ഇഷ്യൂ ആണ്, which is 2,400 into 1/10. And the cost, you know that for bonus issue there is no cost. So you have to take a total here. Total number of shares is 2,640. The total cost is 6,600. So we need to get the cost of 400 shares. So the cost of 400 shares is equal to 6,600 divided by 2,640 into 400, which is 1,000. So once you get the cost, you have to input that to your main formula. So we need the cost of how many shares? 400 shares as well. For 400 shares, and we've calculated the cost of 400 shares, which is 1,000. So here you will not have a gain, rather you will have a loss of 100. So you will have a allowable loss of 100. Okay, guys, so we are moving to the next question, which is from, so we are almost done with MCQ part right now. Last is business relief, and this is very important. Christos sold his business, which he had owned for 5 years, in January 2024. He realized a gain of 1,77,000 on the sale of business premises and a loss of 16,500 on the disposal of goodwill. Christos has no other chargeable gain or loss. His taxable income is 38,000. What is his CGT liability? So, when we are doing the computation for Christos, we will start off with, already the gain figure is given to us. There is a gain on sale of premises and there is a loss on the disposal of goodwill. So first thing first, you will have to calculate your net chargeable gain. So your chargeable gain is current year chargeable gain. Current year chargeable gain on disposal of business premises is equal to 1,77,000. From this, you have to deduct current year loss on disposal of goodwill, which is equal to 16,500. So you will get a net chargeable gain here. From this net chargeable gain, you will have to deduct AEA. So here AEA is 6,000, and from 6,000, you will get your taxable gain. So 150 for 500 is your taxable gain. We have to ask the question, is your taxable income, which is 38,000, is your taxable income greater than 37,700, which is your basic bandwidth? So the answer is, before that, he sold his business, which he owned for 5 years in January 2024. So he is actually eligible for BADR relief here. Why? Because he is selling his business, and then he has held the business for minimum 2 years prior to disposal. So yes, he is eligible for BADR. So you don't have to consider the normal rule. CGT payable, he is eligible for BADR. So first 1 million of his gain will be taxed at 10%. So BADR, that is equal to 150 for 500 will be taxed at 10%. So this is equal to this figure into 10%. 15 for 50. Just be extra careful about that. If no mention was about a business being sold, you can apply the normal situation, the taxable income greater than 37,700, and accordingly you can do your rate of tax. Which of the following statements regarding investor relief are correct? The minimum holding period of qualifying share is 2 years starting from 6th April 2016. So there are certain conditions which have to be met before you are eligible for investor relief. One of the condition is you own the share at least 3 years after 6th April 2016. So here they said 2 years, so that is wrong. Qualifying shares include listed shares in trading company. It not only includes listed but also unlisted shares as well. There. These must be subscribed or newly issued. So they have to be directly subscribed from the company or newly issued by the company. That is absolutely correct. An individual cannot be an employee of the company to qualify for investor relief. That is also correct. So the answer is option C and D. Peter sold a warehouse on 27th June 2023, which resulted in a chargeable gain. During what period must reinvestment take place if Peter wishes to claim ROR relief? Remember, ROR relief is made to the purchase 1 year before the disposal or 3 years after the disposal. So if the disposal is happening on 27th June 2000, the disposal is happening on 27th June 2023, 1 year before the disposal. 1 year before disposal എന്ന് പറയുമ്പോൾ 1 year before disposal means 27th June 2022 തൊട്ട് 3 years after disposal. 3 years after disposal എന്ന് പറയുമ്പോൾ 27th June 2026. ഈ ഒരു കാലയളവിൽ നിങ്ങൾക്ക് പർച്ചേസ് ചെയ്ത അസറ്റിലേക്ക് നിങ്ങൾക്ക് അത് റോൾ ചെയ്യാൻ വേണ്ടി പറ്റും. ഒന്നെങ്കിൽ നിങ്ങളുടെ ഡിസ്പോസൽ ഡേറ്റ് പ്രീവിയസ് 1 ഇയറിൽ പർച്ചേസ് ചെയ്തത്, അല്ലെങ്കിൽ നിങ്ങളുടെ ഡിസ്പോസലിന് ശേഷം 3 ഇയേഴ്സിനുള്ളിൽ പർച്ചേസ് ചെയ്തത്. സോ ദ ആൻസർ ഇസ് ഫ്രം 27th June 2022 to 27th June 2026. Option B. In February 2002, Ronald bought a freehold building for use in his trade for 155,000. In June 2023, the building was sold for 620,000. Ronald bought a replacement freehold building for 420,000. So they are asking you what is the amount of gain that can be rolled over. Now keep in mind in this question, you sold the old building for 620,000 and you purchased a building for 420,000. So it is a case of partial reinvestment. You got 620 but you only spent 420. So partial reinvestment എന്ന് പറയുമ്പോൾ the entire gain cannot be rolled over. So what was the equation? First you will take your sale proceeds. So your sale proceeds is equal to 155,000. From your sale proceeds, let me just, 620,000. So my bad, 620,000. From the 620,000, you will deduct the cost of 155,000. You'll deduct the cost of 155,000. And you will get a gain figure of 465,000. From this, there is ROR, which is a balancing figure, and you will get your chargeable gain. Now, before that, we need to calculate our chargeable gain. So how do you do the calculation for chargeable gain? Chargeable gain is equal to lower of sale proceeds of the first asset, that is 620,000, minus cost of the first asset, 155,000, which is equal to 465,000, or sale proceeds of the first asset minus cost of the second asset, which is 420,000, which is equal to 200,000. So here the lower figure is 200,000. So you have to write here 200,000. That means your ROR is equal to here ROR is equal to 265,000. This is the gain that you can roll over. Janice owned shares in a personal trading company which had cost 23,700. In August, she gave the shares to her brother. At the date, the market value of the shares was 82,500 and all of the chargeable assets were chargeable business asset. So they are asking you what is the gain that can be held over. Normally, when it is a question of holdover relief, there should be some indication that there is an application of holdover. Either an election made for holdover, like in this case, they specifically asked you what is the holdover. അല്ലാത്ത പക്ഷം ഗിഫ്റ്റ് കൊടുത്തു എന്ന് പറഞ്ഞിട്ട് holdover relief calculate ചോദിക്കണം. What is the amount that can be held over? Or they should tell you that there is an election for holdover relief. So here, the equation or the format for holdover relief, first you'll take the sale proceeds. As always, you'll take the sale proceeds. So your sale proceeds is equal to sale proceeds is equal to, it's deemed proceeds because it is market value. Why? Because it is given to connected parties. So you have to take the deemed proceeds here. Market value at the time of disposal, which is equal to 82,500. From that, you have to deduct the cost that you've incurred to purchase that asset. So the cost is equal to 23,700. So that brings us to our gain amount. Now from this, you have to find out the balancing figure of gift relief. And finally, you will get your chargeable gain. Now again, keep in mind, coming to the chargeable gain, you have to find that out, which is your actual proceeds, which you don't have any proceeds in this question. It was a gift, 0 minus actual cost. So the actual cost was 23,700. That brings us to, if it's a negative here, you have to put a 0. So your chargeable gain is 0. That means your gift relief, this entire amount can be claimed as your gift relief. $58,800. Next one. Which three of the following are qualifying business asset for CGT ROR relief? Car is an exempt asset in CGT. Then fixed plant and machinery, yes, you can consider that. Furnished holiday accommodation, yes, that is also eligible for ROR and BADR as well. And a warehouse, that is also eligible. Now coming to movable plant and equipment, that is not eligible for ROR. If it's fixed plant and equipment, yes, that is eligible. So answer is B, C, and D. Remember, car is not at all included in CGT, and since it was movable plant and equipment, this is also not considered. So the answer is option B, C, and D. Last one. What is the base cost of replacement warehouse for CGT purpose? And this is a pretty difficult or a tricky one, and you have to answer in the nearest pound. Alice is in business as a sole trader. On 13th May 2023, she sold a freehold warehouse 184,000, and this resulted in a chargeable gain of 38,600. So the question is telling you that the warehouse was sold. So the sale proceeds of the warehouse, sale proceeds is 184,000, and if it has resulted in a chargeable gain of 38,600, yes, it has resulted in a chargeable gain of 38,600. So we don't know what is the cost, what is the ROR relief here. So what was the what was the cost? Only when you deduct the cost minus the sale proceeds minus the cost, you will get the figures for comparison. So the figures given here is sale proceeds. Then you are given the chargeable gain. Chargeable gain is given as 38,600. The next information is Alice purchased a replacement warehouse on 20th May, that is towards ahead, that means after the disposal, for 143,000. Where possible, so it is a case of partial reinvestment. You have sold it for 184,000 and you replaced it with an asset of just 143,000. Just 143,000 asset വെച്ച് അപ്പോൾ ഇത് partial reinvestment ആണ്. Now, partial reinvestment എടുക്കുന്ന സമയത്ത് നമ്മൾ കമ്പയർ ചെയ്യുവാണ്. നമ്മൾ കമ്പയർ ചെയ്യുന്ന സമയത്ത് chargeable gain എങ്ങനെയാണ് കണ്ടുപിടിക്കുന്നത്? Chargeable gain is lower of sale proceeds of A1 minus cost of A1, or sale proceeds of A1 minus cost of A2. Now, sale proceeds of A1, which is 184,000 minus X, I don't know that, and sale proceeds of A1 minus cost of A2. Sale proceeds of A1 is 184,000 minus cost of A2 is, the cost of the second asset is 143,000. If you deduct this, you will get a figure called 41,000. So obviously that was not lower. The lower figure was 38,600. So just imagine, what did you deduct from 184,000 so that you got 38,600 as your answer? So the cost of the first asset is, cost of first asset is equal to 184,000 minus 38,600, which is 145,400. Okay. Anyways, so you got the cost as well. Now we are going to do the comparison. We got all the figures. Now, what did I do here? I know that chargeable gain is directly given, which is 38,600. Normally, how do you get your chargeable gain? It is lower of A and B. A is sale proceeds minus first cost and sale proceeds minus second cost. One was 41,000, the other one is 38,600. Obviously, that's why you selected it, and that's how I got the cost of the second asset. Now I'm going to apply that. Sale proceeds is 184,000 less the cost of the second asset. So cost of the first asset, which we were calculated 145,500. So you will get your gain figure from this. From that gain, you have to find a balancing figure of ROR. And from that, you have to calculate your chargeable gain. Now, chargeable gain is lower of which we have already included. So, chargeable gain figure is 38,600. This is 145 font. The slide mistake 145 font. Okay, so it is 38,600. That means what is your ROR? Your ROR is 0. Only if you have 0 ROR, your chargeable gain will end up 38,600. That means you did not have a rollover relief there. So if you have to calculate your base cost is base cost of A2, which is equal to, you have to take the original cost of A2, which is 143,000, and from this you have to deduct ROR, which was basically 0. That brings us to 143,000 as your base cost of the second asset. So the answer is 143,000. So we are done with the MCQ part. Now let us do some questions from multitask questions. So those are doing self-study, and for students who are planning to refer, I'll make the work easy for you. Which all questions are related to CGT under the multitask question area. Okay, so when you take your study hub, go to practice questions. Under practice questions, there is objective test case revision questions, multiple topics. So this is what you have to look here. Under this topic, you can work out Winston, which is related to CGT, Om and Leroy, which is related to CGT. Then there is Mike, which is related to CGT. Patrick and Emily related to CGT. Then question Tom and Valerie related to CGT. And there is a question called Annie. These six questions are related to CGT. So if you're planning to work out questions from CGT, these are your multitask questions. And make sure you do it before the examination. So we will start. So let's take Annie first. First question. Complete the following sentence to explain why Annie's disposal of ZBD Limited shares during the tax year 23-24 did not qualify for BADR. So we will revise what are the conditions required to be eligible for BADR relief. Either you should sell the business, or you should sell a substantial part of the business, or you should seize your business and sell the assets within 3 years after cessation, within cessation. Now, if it is a case of shares, It should be a personal trading company. That means you should have a minimum of 5% shareholding and voting rights, and you should be an employee of that company. And there is a qualifying period of 2 years prior to disposal. This has to happen 2 years prior to disposal as well. So if any one of the condition is not satisfied, automatically are not eligible for BADR relief. Now let us go back to the case of Annie. You should assume today's date is 1st March 2024. Annie has made several chargeable disposals during the tax year 23-24. Ordinary shares in ZBD Limited. ZBD Limited is an unquoted trading company with an issued share capital of $200,000 on shares. So first thing we need to check is this Annie's personal trading company? Does Annie have a minimum of 5% holding? So Annie has been a director of this company. Okay, she has been an employee from 2018. That means for a minimum of 2 years. On 20th June 2023, she sold 23,000 of her holding of 40,000. So basically, out of 200,000 shares, she used to hold 40,000 shares. That is a total of 20%. So it is her personal trading company. She has been an employee of the company. All these conditions are satisfied. She had originally purchased 20,000 shares on 8th August 2022 for 1,10,000. On 2nd December 2022, there was a rights issue for which she got the remaining shares. So the problem is, in order for you to claim BADR relief, you have to have a minimum holding period of 2 years prior to disposal. So you are making the disposal in 22-23 tax year, but in August and later in December, you received some of the shares. That means you did not hold the shares for a minimum of 2 years prior to disposal. So you cannot claim BADR relief. So the issue is holding period. വിൽക്കുന്നതിന് മിനിമം 2 years എങ്കിലും നിങ്ങൾ ആ ഷെയർസ് ഹോൾഡ് ചെയ്തിട്ടുണ്ടാവണം. സോ ദാറ്റ് വാസ് നോട്ട് ഹാപ്പനിങ്. യു had 40,000 shares. അതിൽ 25,000 shares was purchased just a year before your disposal. Then remaining some of the shares was received as rights issue. That also before the disposal. Minimum 2 years from disposal. Then second question. What cost figure will have been used in calculating the chargeable gain on Annie's disposal of 25,000 ordinary shares in ZBD Limited? Okay. So let's see. ZBD Limited, again the same story. She sold 25,000 shares of 40,000, 25,000 of her holding shares of the total 40,000. She had originally purchased 20,000 shares on 8th August 2022, and then she had received a rights issue. That's how the entire shares was received. So when you are asked to calculate the cost figure for this, so we have to apply the matching rule. So how do you apply the matching rule here? So what we're going to do is, one column is for shares. You same day of disposal following 30 days illa, so you have to take it from the share pool and the cost column. So initially you had purchased 20,000 shares for a cost of 110,000. Then there were a rights issue, that is 20,000 shares into the rights issue is happening for 1 shares, 1 divided by 1. So that is equal to, again, that is 20,000, and that is equal to 20,000 into the rights price. Remember, rights issue brings in cost of 5.2 per share. That's given in the question. So you have made the rights issue. You have subscribed for the rights issue by paying 5.2 pound per share. So this is your total cost and your total shares. Now you have 40,000 shares and the cost of this 40,000 shares. And now from this you have deducted 25. You have sold 25,000 shares. Now for that 25,000 shares, we have to find the cost. So that is equal to 2,14,000 is the cost of 40,000 shares. You need to find out the cost of 25,000 shares, which is equal to 133,750. This ഇത്രയും ഷെയറിന്റെ കോസ്റ്റ് ആണെങ്കിൽ നമുക്ക് ജസ്റ്റ് ഒരു 25,000 വിറ്റ് പോയതിന്റെ കോസ്റ്റ് കിട്ടിയാൽ മതി 133,750. So the answer is 133. If you have decimals, please round it. Next one. What cost figure will have been used in calculating the chargeable gain on the disposal of Annie's 4 hectares of land on 31st July 2023? And again, keep in mind, when there is a land computation, there might be a case of part disposal. So they're asking you what is the cost of the 4 hectares of land. Okay, let's see. On 31st July 2023, Annie sold 4 hectares of land for 40,000. Annie had originally purchased 10 hectares of land and had sold 6 hectares of land in 2016. The market value of the remaining 4 hectares at 2016 was 20,000. So the original cost you have spent is 30,000. We need to split this 30,000 to get the cost of that 4 hectares. Now, how do you do that? For that, first what we are going to do is we are going to find out the cost of 10 hectares, which is given in the question as 30,000. From this, we need to find out the cost of the first 6 hectares. Cost of 6 hectares. So cost of 6 hectares is equal to 30,000 into A divided by A plus B, which is the sale proceeds of the 6 hectare. So the 6 hectares were sold for 25,000. So that is 25,000 divided by 25,000 plus market value of the remaining land, which is 20,000. So that brings us to the cost of is equal to 30,000 into 25,000 divided by 25,000 25,000 plus 20,000. That is 16,667. So that is the cost of 6 hectares. Now, I need to find out the cost of the 4 hectares. I know that 30,000 is the total cost. Other 16,667 is the cost of 6 hectares. അപ്പോൾ പിന്നെ ബാക്കിയുള്ളതിന്റെ കോസ്റ്റ് കണ്ടുപിടിക്കാൻ എളുപ്പമല്ലേ? So remaining is 8,333. That is, sorry, my bad. This is 13,333. So that is, so the requirement was a cost figure. So it is 13,333. Next one. What is the revised base cost of Annie's antique carpet for CGT purpose? On 31st December 2023, an antique carpet owned by Annie was damaged by flood. Okay, so this is again a case of flood, but I'll just work out for you. Then the carpet has been purchased for 50,000. Annie received an insurance proceeds of 18,000 on 15 January 2024, and she spent a total of 20,000 January 2024 restoring the carpet. The carpet was valued 75,000 immediately following the restoration of the carpet. So they're asking you what is the revised base cost of the carpet. Keep in mind the total cost of the carpet is 50,000. To this you can add the restoration cost of 20,000. So carpet has been purchased for 50,000. There is a restoration cost of 20,000. And from this, you have to deduct the insurance that you have received of 18,000. അപ്പോൾ ഇൻഷുറൻസ് ഇവിടെ കഴിഞ്ഞിട്ടുള്ള ബാക്കിയാണ് നിങ്ങളുടെ കോസ്റ്റ് എന്ന് പറയുന്നത്. So, which is equal to, you have to take your purchase cost, which is equal to 50,000. To this, you have to add restoration, which is equal to 20,000. And from this, you have to deduct insurance, which is equal to 18,000. This difference figure ആണ്. This difference figure ആണ് 52,000. So that is the base cost of the anti-carpet. Last one. Which of the following assets which are all standing at a loss would result in a capital loss for a CGT purpose? Keep in mind, ഇവിടെ തന്നെ I know that a qualifying corporate bond is an exempt asset. I know that shares held in ISA is an exempt asset. I know that car is an exempt asset. So that means the only item is antiques and decoration for bravery which Annie purchased. Now keep in mind, if this bravery award was given to Annie, that is an exempt asset. Okay, if she was given a award for bravery, that is an exempt asset. She purchased the award or decoration, so it becomes taxable. So answer is B and D. Next, let's do a question called Tom and Valerie. First requirement. What is Valerie's CGT liability for the tax year 23-24 in respect of the disposal of the shares in Wood Limited? So, let's read the story of Valerie. On 1st February 2024, Tom gifted 12,000 ordinary shares in Wood Limited, an unquoted trading company, to his daughter Valerie. So it was a gift. So Valerie did not pay any money to Tom. Instead, she received it as a gift. The market value of the shares on that date was 98,000. So when this gift was given to Valerie, the market value was 98,000, which is the deemed proceeds. Tom had originally subscribed these shares at par value, so the cost for Tom was 12,000. Then Tom and Valerie have elected to hold over the gain as a result of business assets. So basically, they are planning to claim gift relief here. Then later, Valerie sold this 12,000 shares for 98,000. So you are asked to calculate what is her CGT liability. So Wood has a share capital of 100,000. Tom was sales director of the company from its incorporation. So if Tom had sold the shares, Tom can claim their BADR relief because it is his personal trading company. If you notice, 12,000 shares out of 1 lakh is more than 5%. And he was also an employee of that company. But he has never, he was also an employee of that company. So he could claim BADR relief. But Valerie has never been an employee of that company. So that makes students believe on the investor relief apply cheyana. No. Because in order to apply investor relief, that shares has to be directly subscribed from the company, which did not happen for Valerie because she received it as a gift from her father. So the question was to calculate CGT liability of Valerie. So there is no BADR relief or investor relief. But if the question was to calculate the amount of CGT liability for Tom, if there was a gain, you could apply their BADR relief. For the tax year 23-24, Tom and Valerie are both high rate taxpayer. They have both made other disposals which have utilized their AEA. So keep in mind their taxable income is greater than 37,700. So whatever gain they make, Valerie makes, it will be taxed at a higher rate of 20%. Our taxable income 37,700 മുകളിലായതുകൊണ്ട് എന്ത് ഗെയിൻ ഉണ്ടാക്കിയാലും അതിന് 20%. ഇൻവെസ്റ്റർ റിലീഫ് BADR റിലീഫ് ഉണ്ടായിരുന്നെങ്കിൽ 10% പോയേനെ. അല്ലെങ്കിൽ the full gain will be taxed at 20%. AEA already utilized ആണെന്ന് പറയുന്നുണ്ട്. So we need to calculate the CGT liability for Valerie. So what I'm going to do here is, they have claimed gift relief, right? So computation of chargeable gain For Tom, at time of gift to Valerie. So I am going to make it very detailed here. You can skip all these steps. First one is deemed proceeds for Tom because he did not receive any money, the market value, which is 98,000. From this, you can deduct the cost that he had incurred, which is par value, which is 12,000 into par value is £1. What? So your gain amount is equal to. Then from this, you can deduct your gift relief. And finally, you will get your chargeable gain. Now, chargeable gain is your actual proceeds minus actual cost. So for Tom, there is no actual proceeds. Actual cost is 12,000. It's a negative figure. You have to put 0. So chargeable gain is 0. Your chargeable gain is 0. That means this entire amount was claimed as gift relief. Now, eventually, when you do the computation of base cost for Valerie, she will have to take the deemed cost, which is the deemed proceeds of Tom. From that, she has to deduct the gift relief figure, which is equal to 86,000. So the base cost of these shares for Valerie ഭാവിയിൽ ഇത് വിൽക്കുന്ന സമയത്ത് ഈ ഷെയർസിന്റെ ബേസ് കോസ്റ്റ് എന്ന് പറയുന്നത് is 12,000. So she can only, in her future computation, she can use the cost as only 12,000. So computation of chargeable gain for Valerie in future. That's what we need to find out. So starting off with sale proceeds. So Valerie had sold sale proceeds. So the total sale proceeds here is Valerie had sold it for 98,000. So that is 98,000. Less you have to take the base cost here. So the base cost is equal to this 12,000. So the chargeable gain for Valerie is, then there is no AEA because AEA is already utilized. So there is no AEA. That brings us to our taxable gain. Taxable gain of 86,000. Now, Valerie is not eligible for BADR because it is her personal trading company, but she's not an employee of the company. And she is also not eligible for investor relief. She is not an employee of the company, but she did not subscribe the shares for investor relief. That means she is a high income earner. Her taxable income is greater than 37,700. Therefore, CGT payable is equal to 86,000 into 20%. $17,200. If Tom had sold 12,000 shares in Wood Limited himself for 98,000 and then gifted the cash proceeds to Valerie instead, which two of the following statements would have been true in relation to the CGT implication? The CGT liability would have been paid later. Now keep in mind, they are not planning to change the date of disposal. Therefore, there is no change in the timing of payment. അപ്പോൾ അത് മാറുന്നില്ല. Cash gift would have been qualified for gift holdover relief? No. Only business assets are eligible for gift holdover relief. Cash gift would not have been a chargeable disposal. Yes. And business BADR relief would have been available. If Tom had made the disposal, there would have been a BADR relief. Then, next one, question number 3. What is Dhoni's chargeable gain on the residential property for the tax year 23-24? On 31st March 2024, Dhoni sold a residential property on 31st March 2024, Dhoni sold a residential property for 385,000, which he had owned individually. Cost of the selling property was 5,000. Cost of selling the property was 5,000. Selling cost. The purchase cost was 170,000. The property was occupied by him and his wife as their private residence throughout the period of ownership. 1/4 of the property was always used exclusively for business purpose by the couple. Business asset relief is not available. For the tax year 23-24, Dhoni is a high rate taxpayer. Charlotte did not have any taxable income. This will remain the case for the next financial year also, tax year also. Neither of them has made any other disposals of assets during the year. Why did they say that? They did not make any other disposal of the assets during the year means their AAA is still available. This property is individually owned by Dhoni. It's a residential property, so the rate of tax will be at 18%. But they're only asking you to calculate the chargeable gain here. Now, we need to first find out what was the sale proceeds. So the sale proceeds is 3,85,000. The sale proceeds is equal to 3,85,000. Out of this 3,85,000, then you need to deduct the cost that was incurred. So the purchase cost was 170,000. And the selling cost was also given to you. I just slightly changed the order. It was actually the selling cost first, okay? So anyway, deduction alone. Selling property cost was 5,000. So you got your gain amount. Now this entire gain is not so basically they were eligible for PPR relief. If you are aware, they are eligible for PPR relief. Why? Because it is a main residence. They have stayed in that residence throughout the period of ownership. So it is gain amount into. The problem is out of this 2,10,000, 1/1/4, that is 1/4, is used for business purpose. So PPR relief is only available for 3/4 of it. So that is equal to this amount into 3 divided by 4 is eligible for PPR relief. That means the remaining portion is your chargeable gain. 50 to 500. What amount of CGT could have been saved if Dhoni had transferred 50% ownership of the residential property to Charlotte prior to the disposal? So if 50% of it was transferred to Charlotte, let us just split the chargeable gain. 50% of the chargeable gain for Charlotte. Okay. If they had split the ownership, 50% will be for Tom and the other 50% for Charlotte. That is equal to this amount into 50%. Now, what is the benefit? Number one benefit is Charlotte is a zero income earner. So first advantage is you can make use of the 6,000 AEA. Okay, so you can save tax 6,000 into 28% tax there, because if he was making that payment, if he was making that payment, yes, he will get an AE of 6,000. But even after that, because he is a high income earner, the rate of tax will be 28%. But since Charlotte is making the disposal, Charlotte will be eligible for a 6,000, and she is not going to pay any, she does not have any income. So here that entire 6,000 will be taxed at 0%. So the first benefit is you get to save 6,000 into 28% there. Second thing is, Charlotte is a zero income earner. So that means 37,700 Charlotte in the case. Okay. That means out of 26,250 minus 6,000. So whatever will be the taxable gain. That taxable gain, instead of getting taxed at 28%, if Tom had 28%, why? Because Tom is a high income earner. Since it is Charlotte, she will only have to pay 18% tax there. So that is equal to this amount minus 6,000. Here, a 10% reduction body under the. So the total amount you save there is 3,705. Now, once again, I want to explain this. Here, Tom is a high income earner, high rate taxpayer. So whatever be the gain, Tom will have to pay a tax at 28%. Is a residential property. If he is sharing the gain, or if he is sharing the ownership to his wife, what happens is wife can use that 6,000 AE. So instead of Tom paying that 6,000 28%, wife will pay 0% on that 6,000. അപ്പം വൈഫിന്റെ എ ഉപയോഗിച്ചിട്ട് ഒരു 6,000 നിൽ റേറ്റ് കൊടുക്കാൻ വേണ്ടി പറ്റും, എ കൊടുക്കാൻ പറ്റും, 0% കൊടുക്കാൻ പറ്റും. Second thing is 20, the gain amount minus 6,000, that much quantity, if husband പോവായിരുന്നെങ്കിൽ he would have to pay 28% tax. Wife ആയതുകൊണ്ട് only 18% tax അടച്ചാൽ മതി. Again you are saving 10% tax there. So I hope this portion is clear. So the amount of tax you're saving is 3,705. So it's a pretty interesting and a difficult one. So make sure you revise it. What amount of CGT would have been saved if Dhoni? Okay, we have done that. What is the payment date for Dhoni's CGT liability, and what would the payment date be if Dhoni delayed the sale of residential property on 1st July 2024? Now keep in mind, the residential property payment has to be made within 60 days after the disposal. So if the sale date is 31st March 2024, by 30th May, 2 months, 60 days, they have to inform. If the sale date is 1st July 2024, then by 30th August, that is after 2 months, you have to pay and inform the HMRC. So answer is always 60 days after the disposal, within 60 days after the disposal. The next one is Patrick and Emily. Next question is Patrick and Emily. Based on the information given, how many ties do Patrick and Emily have when considering their residency status for the tax year 23-24? So Patrick and Emily are a married couple. They have both always been resident in the UK. So everything that applies for Patrick applies for Emily as well. So they are in the same situation. Appo rendu perinte residency ore pole treat cheytha madi. They both have been resident in the UK, being in the UK for more than 300 days each tax year up to 22-23. Appo kazhinja varsham vare per tax year they were spending a minimum of 300 days in UK. Following Patrick's retirement, the couple decided to move overseas, purchasing an overseas property, although they remain resident in the UK for the tax year 23-24. They are resident in 23-24. So they have a house overseas and they have a house in UK as well. Patrick and Emily still have a house in the UK and will stay there for 105 days, which they spent in the UK during 23-24. So let us apply the automatic overseas test. ഈ വർഷം less than 16 days, no. Less than 46 days, no. Neither Patrick nor Emily works full-time and neither of them will do any substantive work in 23-24. So, does they have a full-time overseas job? No. That means automatic overseas test fail. Now, let us do automatic UK test. Spend more than 183 days in UK? No, because it's just 105 days. Substantive work, have a full-time job in UK? No. Or have only home in UK and no other home overseas? No. So automatic UK test fail. The last one is sufficient ties test. They are spending 105 days during the tax year and they were previously resident. So I have to go to the data, the tax residency status. I'll go here. I'll go here and I'll see tax residency status. Previously resident to honor spend between 105 days during the taxes. So minimum 2 ties have to be met in order to be classified as a UK resident. So what are the number of ties required? How many number of ties are required? So the answer is 2 ties are required. Based on the information given, what would be Emily's taxable gain if she sells the shares in Shore Limited? Okay. For the tax year 23-24, Patrick will have a taxable income of 7,200. Emily will have a taxable income of 46,400. So she is a high income earner. Emily disposed of an investment and the resultant chargeable gain fully utilized at AEA. So AEA is already utilized. They immediately need to raise 80,000 in order to renovate their overseas property and they have 2 assets which can be sold. So they want to see which one will give them the highest net of tax proceeds. First one, Emily owns $8,000 ordinary shares in Shore Limited, an unquoted trading company with a share capital of 100,000. So this is what they are asking you. 8,000 shares out of the 1 lakh shares. She has been selling recently these shares market value is 1.3, but she immediately wants to make the sale. So this is happening for 11.5 per share, given that she needs a quick sale. The sale will be an unconnected person. So that means you don't have to take the market value as such. Whatever is the exact figure, you can take that. Emily subscribed for the shares in Shore Limited on 1st June. She has been a director of the company since that date. So that means she is not eligible for investor relief. Why? She directly subscribed from the company. But the problem is she is an employee of the company. So investor relief applicable alla. BADR eligible ആണോ എന്ന് നമ്മൾ നോക്കണം. BADR എന്ന് പറഞ്ഞു കഴിഞ്ഞാൽ out of the 100,000 shares, she is having 8,000 shares. Okay. So 8,000 shares is basically 8% holding. So that is 8% holding. So she is actually eligible for BADR relief. Personal trading company has been an employee of the company for a minimum of 2 years. Anyways, the question was to calculate the taxable gain vare kandupidicha madi. So what we're going to do is we'll start off with the sale proceeds. Since it is an unconnected party transaction, so sale proceeds is equal to not the market value but the price at which she made the sale. This is 11.5. 11.5 into 8,000 shares. 8,000 shares. From this, you have to deduct the cost she incurred. So it was said in the question that she had purchased the shares at a par value. So she has 8,000 shares and she purchased that 8,000 shares at a par value. So subscribed at par value. So the cost is also 8,000 into 1 pound is into 1. So here the chargeable gain is 84,000. There is no AE available because it is already utilized. That means the taxable gain. $84,000. So the answer is 84,000. Next one. What will Emily's net proceeds from the sale be after taking account of the CGT? So when you get a question like this, we need to consider the data for Emily itself. We need to consider what is the net proceeds after taking into account of the CGT liability. Okay. So they're asking you, assume that there is a question. Third question is, assume that Emily's proceeds from the sale of the shares is 78,000. So they're asking you to assume that it is not 9. It is not. We had calculated it to be 92,000. So instead of that, they're asking you to assume that the sale proceeds was 78,000. And they're asking you, what is the net proceeds? What is the net proceeds after paying out the tax? Tax would അടച്ചു കഴിഞ്ഞിട്ടുള്ള net proceeds എത്രയാണ്? So when you're asked a question like this, you normally find out the CGT liability and deduct it from your sale proceeds. That's it. So what you're going to do here is, so we are going to deduct the cost, which is 8,000. So you will get your chargeable gain here. So your chargeable gain is 70,000. There is no AEA available for you. Why? Because it is already utilized. So that means your taxable gain is 70,000. Your CGT payable is equal to, you're eligible for BADR relief. I hope you remember the condition. She was an employee of the company. It's a personal trading company. So she's eligible for BADR relief into 10% BADR relief. So that is equal to, her CGT amount is 7,000. So the net proceeds is equal to, so net proceeds is equal to 63,000. So when you get a question like this is how you have to take the approach. So the question was, assume that the proceeds is 78,000 as a result of unexpected selling cost. What is her net proceeds from the sale be after taking account of CGT? So after you deduct your CGT and then you find out what is the net proceeds. So the answer is 63,000. Then, if Patrick and Emily jointly held the shares, what would the capital gains tax liability arise for Patrick? Patrick and Emily jointly holds 32,000 ordinary shares in Beach Limited, a quarter trading company. The shares are currently quoted at 2.88. Patrick and Emily originally purchased 54,000 shares in Beach PLC on 23rd May 2012. For 75,600. But they sold 22,000 shares on 17 November 2021 for 44,440. The shareholding is less than 1%. Neither of them has been an employee. So you cannot claim BADR relief, nor you can claim investor relief there. It's a shareholding is less than 5%, not an employee of the company. If Patrick and Emily jointly held the shares, so in that situation, only 50% of gain will move to Patrick. And Patrick, as the question suggests, both of them have utilized their AEA. So Emily had utilized her AEA, but Patrick's AEA is still existing and Patrick is a basic rate taxpayer. So the rate of tax will reduce there. So let's do the calculation. First, let us find out what is the chargeable gain. So the sale proceeds is equal to, so that is 32,000 shares. They're planning to sell 22,000 shares out of 32,000. 22,000 shares at a price of 2.88. Then from this, sorry, my bad. They're talking about the jointly held shares. So the jointly held shares is 32,000. Okay. Already 22,000 shares were sold for 44,440. And already that's already done. Then 32,000 into 2.88 sale proceeds less the cost. So they have owned, the shares are currently quoted. They originally purchased 54,000 shares for 75,600. So we need to find out the cost of 32,000 shares. So if the question says that 75,600 is the cost of 54,000 shares, we just need to find out the cost of 32,000 shares. So 32,000 divided by 54,000. So that is equal to 75,600 into 32,000. 32,000 divided by 54,000. So that is the cost. So your chargeable gain is equal to 47,360. Now 50% of the gain will go for Patrick. So that is equal to 50% into 47,360. Now from this, Patrick can deduct AEA because his AEA is not utilized. So he can deduct an AEA of 6,000. That brings us to the taxable gain 17,680. Now, remember, Patrick is a basic rate taxpayer. His taxable income was, it is said in the question, his taxable income is just 7,200. So his taxable income 7,200 is less than, so is it greater than 37,700? No. Is 7,200 plus 17,680 less than 37,700? Yes. So he's a basic rate taxpayer. CGT payable is equal to 17,680 into just 10%. So that brings us to 17,680 into 10%. Okay, so once again, you just calculate, normally you calculate the gain, split it 50% for Patrick. Patrick can use his AEA because his AEA is still available. He's a basic rate taxpayer. He's a basic rate taxpayer. Therefore, he can make the tax payment at 10% basic rate. Now, they jointly held 32,000 shares. They're asking you about the jointly held shares of 32,000, not the 22,000, which was already sold for 44,440. Now, so here the answer is 1768. We need to continue. One more question on that. If Patrick and Emily sell the jointly held shares in Beach PLC, which of the following statements would be correct in respect of the sale? Patrick and Emily will have the same CGT liability as each other? No, because one person has AEA, the other person does not have AEA, and one person is a basic rate taxpayer, the other person is a high rate taxpayer. So no. Patrick and Emily will have the same taxable amount. That is also not happening because again, AEA is different. Patrick and Emily will suffer the same rate of CGT? No. So the answer is none of the above. Remember, one person is having AEA, the other person does not have AEA. one person is a basic rate taxpayer, the other person is a high rate taxpayer. So the rate of tax, taxable amount, and the amount of tax, everything will be different for both of them. Next question. MIC. First requirement. Assume no rollover relief is available. What is the chargeable gain arising in respect of disposal of the warehouse? You have to give your answer to the nearest found in the answer box. So let's go to the data. On 19th May, Mike sold a freehold warehouse for 522,000. The warehouse was purchased for 258,000, was extended at a cost of 99,000 during April 2013. In January 2017, the floor of the warehouse was damaged by flooding and had to be replaced at a cost of 63,000. The warehouse was sold because it was surplus to the business requirement as a result of MIC purchasing a newly built warehouse. Both warehouses have been used for business purposes in a wholesale business run by MIC as a sole trader. First part of the question is, assume there is no rollover relief. What is the chargeable gain arising on the disposal of the warehouse? So let us do the calculation. First, we'll take the sale proceeds related to the warehouse. So here they sold a warehouse for 522,000 and the warehouse was purchased for 258,000 and it was extended at 99,000 as well. There was a replacement cost. Please keep in mind, replacement is a non-deductible expenditure. It's a revenue expenditure. So the sale proceeds is equal to 522,000. From this, you will deduct the purchase cost. So the purchase cost is equal to 258,000. From this, you will deduct extension cost is a capital expenditure. You can deduct it, which is 99,000. But keep in mind, replacement is a revenue expenditure. The revenue expenditure indicate 0. So here your chargeable gain is equal to 165,000. Now, this is without ROR. So the answer is 165,000. Next one. What two pieces of further information regarding the replacement warehouse would be required to establish whether maximum ROR is available? So the next things that you should consider is whether it is a full reinvestment or a partial reinvestment. So whether the cost is more or less than the sale proceeds that you received. So if it is less than the sale proceeds, partial reinvestment. If it is more than the sale proceeds, full reinvestment. So we need to find out whether it is a full reinvestment or a partial reinvestment. So C. Another thing is, in order to claim ROR relief, the asset has to be replaced, which is purchased 1 year prior to the disposal or 3 years within 3 years after the disposal. So we need to find out whether it was purchased in 2021-22, that is 1 year before. So let's take the disposal date. It is 19th May 2023. So what we need to check is whether it was purchased on or after 19th May 2022, 1 year before or then 3 years after that. So answer is option B and C. What is the chargeable gain arising in respect of disposal of the hectare of land? We have done plenty of questions on that. Just keep in mind when you do the calculation, it is the total cost into the sale proceeds divided by sale proceeds plus cost of the remaining hectares. So on 12th August 2023, Mike sold a hectare of land. A hectare of land, he just sold 1 hectare of land. He had originally purchased 5 hectares of land. The market value of the remaining 4 hectares were 268,000. The land has never been used for business purpose. That means there is no BADR relief. available. Now, when you do the calculation, we are asked to calculate what is the chargeable gain. So we have to start with the sale proceeds. As usual, we'll start with sale proceeds. Our sale proceeds for 1 hectare is 81,700. From that, we have to deduct the cost of just 1 hectare. So cost of 1 hectare is equal to the total cost of 167,400, which is for 5 hectares, into 167,400 is the total cost for all the hectares, into sale proceeds 81,700 divided by 81,700 plus you need to take the market value of the remaining land, which is 268,000. 268,000. So if you do this, you will get the cost of that 1 hectare, which is equal to 167,400 into 81,700 81,700 plus 268,000. 88,600 divided by 81,700 plus 268. Okay, so we will get our chargeable gain of 1 hectare. 42,591. It's a normal calculation. What is the chargeable gain arising in respect of disposal of shares in Rolling Limited? 24th September 2023, Mike sold $700,000 in ordinary shares in unquoted trading company for $3,675,000. He had originally purchased 500,000 shares for 960,000, and then the remaining 200,000 shares were actually a bonus issue. He has been a director of the company. That means he is eligible for investor relief there, but they did not ask you to do the CGT liability. We don't need that information. We just need to find out what is the chargeable gain. So I'm going to take the sale proceeds here. So I know that the number of shares I sold is 700,000 shares. So I need to find out the value here. I need to find out the amount here. So the amount of the 700,000 shares is 3,675,000. From this, I need to deduct the cost. Same day, following 30 days, both of them are not available. So we're going to take it from the share pool. So we have to take the cost of 700,000 shares from the share pool. So in the share pool, one column is for shares, the other one is for cost. So for shares, we're going to start off with 700,000 shares. The cost of 700,000 shares is 960,000. Then there is a bonus issue of 342. So that is equal to this amount into 3 divided by 2. So for the 700,000 shares, there was a bonus issue for, sorry, my bad. Initially, you had purchased 500,000 shares. So that is 750. Bonus issue means there is no cost. So your total shares is 1,250,000. Total cost is 960,000, of which you had disposed 700,000 shares. You need to find out the cost of 700,000 shares, which is equal to, if 960,000 is the cost of 1,250,000, we need to find out the cost of 700,000. So answer is equal to 960,000 into 700,000 divided by 1,250. So we need to put that in the cost column. And you will get your chargeable gain, which is 3,13,7,400. There. What is the chargeable gain arising in respect of disposal of shares in Sugar PLC? On 19 January 2024, Mike made a gift of his entire holding of $24,000 on ordinary shares in Sugar PLC, a quoted investment company, to his son Keith. On that date, the shares were quoted on the stock exchange at 6.898 and 7.1. Remember, when the shares are gifted to connected party, you have to take the market value, which is the mid price average of the quoted price. The shares have been purchased for 76,800. Mike's holding was less than 1% and he has never been an employee. They are specifically saying this to tell you that he's not eligible for investor relief and BADR relief as well. But we don't need that because we are not computing the CGT liability. Now, he gifted the entire shareholding to his son. So the chargeable gain computation is we have to start with the deemed proceeds. So when you take the deemed proceeds, it is equal to 24,000 is the number of shares into. We have to take the mid price average, which is 6.98 plus 7.10 divided by 2. Divided by 2. So that is equal to 24,000 into, we have to take the average of 6.98 plus 7.1 divided by 2, which is 168,960. So 168,960. Now, what is the chargeable gain? So we got the deemed proceeds. From this, we have to deduct the cost. Now, the cost is we had purchased the shares for 76,800. That is 76,800. So the chargeable gain is equal to 92,160. Okay. Remember, when the shares are transferred between connected parties, in an individual's case, you have to take the market value, which is the mid price range of the quoted value. So there is 2 more questions related to this area. One is Winston and the other one is Ohm and Leroy. You can work out these questions as part of your final revision to have a clarity with CGT. It's very mandatory that you do questions from Study Hub. Students who have relied on Study Hub has proven that you can score pretty good, decent marks for your examination. So make sure you focus on your Study Hub. And make sure you do these 2 questions, Winston and Ohm Leroy, for your final revision of CGT for section B. Thank you, and please reach out for any doubts.